Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is March 28th, 2018, and today is Wednesday morning. So looking at the economic events of the day, we start off the day at 1:30 South African time. Final quarterly GDP numbers coming out of the United States. Not particularly an important number, but if there are any surprises, you do want to know that it is coming out. And then at 3:30 South African time, weekly oil inventories numbers coming out. Now that's an important number, and let's just see what's been happening in the markets in general. So in continuation to this week's rotation, okay, of the previous session's trading, we're seeing that the Euro USD, took a little bit of a relapse yesterday and sold off from 124.75-ish down to 123.80-ish level, okay, over almost 100 pips move in just yesterday's session. So things have been very volatile, okay, up 300 points, down 100 points, et cetera, et cetera. And it's really a haven for scalpers, okay? If you're trading intraday, it's really a unique opportunity for you to jump in. Okay, now moving into this week, okay, we're right at the middle between 124 and just flat 124. So really, technically speaking, the next real support level is 123.60-ish level, and we're just trading above, or really rather below, the 14-day moving average. So we're between the 14-day and 30-day moving average, as you can see. So really nothing jumping out at me at this stage. Okay, it just seems like we're very choppy. We could continue selling off today, and that's what I would look to see if that does actually for rates, or we can go higher. Okay, so it's a little bit more of a difficult trade, but as long as in the 30-minute trade, the 30-minute chart or the 15-minute chart, you see that it is breaking or getting a little bit, breaking either on the upside or breaking on the downside, maybe you could jump in to take a move. But at these levels, it's very, very difficult to trade, okay, to tell you the truth, because it's very choppy, and it just seems like one day we're up 100 pips, next day we're down 100 pips, so it's been choppy. GBP USD, kind of like the same story, okay, we retraced yesterday quite sharply, as you can see, and we're just making ourselves back. If the GBP does break out higher, then that might carry the market higher versus the dollar, okay, across the board. So that's what I would be looking for further trending today. If this does, above this 142-ish level, if it does, challenge it again later today, and see if it does close in into this 143 level, that's what I would be looking to see. USDs are flatlining here at 1164, nothing really doing yesterday, as you can see, but altogether, we've had a tremendous retracement from last week to this week from above 12. We spoke about this. But at these levels, let's just see, because this may still fall out of bed right here, challenging the 1151 level as well. Aussie USD, same story, kind of flatlining down here at 76.90. And we are at the bottom of the move here. So if we do not break further down, we may see a nice bounce. Looking at the commodities, looking at oil, we had that correction that we were looking for. 1355 last week, we rallied and then sold off sharply to 1341 yesterday. Okay, so this may still correct itself. Okay, I still believe it will correct itself on the downside because the equities markets are still pretty strong. So that's what I would be looking here at, either at the next bounce or so on, to look for a possible entry short into gold. Looking at oil, with a number coming out later today, we kind of had a reversal yesterday, and this is what's beautiful about oil. It really trades within its technicals, okay, between 66.43 to 64.61, and we're just at that support level right now. So if we do get a positive number coming out of the oil inventories number later today, we may see a bounce, okay, if there's much more demand for oil and the stockpile of oil in its inventories are receding a little bit, getting smaller, then we may see the price push up higher. Okay, so that's what I would be looking for later today. Now let's jump into the Dow Jones. We had a reversal yesterday, as you can see. We sold off over 300 to 400 points, which is a tremendous retracement. Okay, some of this is not during market hours, so altogether it's 600 points reversals. We had 1,000 points up on Monday, 1,000 points down, or rather 400 to 600 points yesterday, and now we're just challenging this several levels. So ultimately it could be a dead cat bounce, which means that the the bounce that we had starting off on Monday was just short coverings, okay? And we may see a breakdown further. So that's what I'd be looking for later today. Now, if we jump to the DAX, we're so weak in the DAX. You can see we're just below this 11,844. We rallied to 12,000, on Monday, gapping up and then challenging it and then falling right out of bed. So, you know, it's again, it's very difficult at these levels to anticipate which way we're going, because I think the market still wants to challenge its lower level, and to solidify some sort of baseline before it does take it out higher. So, at these levels, just have to be very careful, no picking bottoms. And if we do get that break on the bottom, then we could, sell off much more. And we look at the daily chart. This is as far down as we've been in over a year. So looking at a weekly chart, if we do break these levels, we could definitely go back to the 11,300-ish level, maybe 11,000 level. So, this is really a pivotal moment for the DAX and the Dow Jones, because these levels, I mean, we receded to this level back in February when we had the debacle. But at these levels, if we do continue to sell off, we could see it back down to 23,000, okay, which would be a considerable, retracement for the Dow Jones just in general. JSC, if we jump to it, we had a gap up and then a fill in the gap. Beautiful trade yesterday, and just nothing really giving it to you on the upside at all, and a beautiful short, from the top down. So, ultimately, like I said, this looks like it's starting a downwards trend. Okay, so ultimately, if we do break these levels at 49,900-ish level, we could definitely see it going back to 47,000 as well. So across the board, the equities markets look very weak, but just be careful, okay? Because if they don't break down, that means they're going to go higher, all right? So this is really a pivotal moment for the equities market. This is Fred Razak. I want to wish you guys a great trading day. Thank you.